In the past 5 years, tax revenue collections have grown substantially despite the low economic growth. And more recently, tax buoyancy appears to have run its course following the recession earlier this year, leading to questions as to whether we're hanging on a fiscal cliff. Tax revenue collection is projected to shortfall by an estimated 50.8 billion rand in the 2017-18 financial year and 16.3 billion rand in 2018-19, the largest revenue shortfall since the 2009 recession.
What is key is that we need to take cognizance of the sluggish economic conditions that our country is going through. And it is important, therefore, that we have a correlation between economic growth of the country, and that is juxtaposed the ability of SARS to collect as much revenue as possible. If the economy is not performing, there are concomitant impacts that are related to it.
Tax revenue collections have slowed despite substantial increases announced during the budget speech earlier in the year. Massive job losses and subdued growth in key sectors such as retail, telecommunications and the financial services industry have contributed to the shortfall. While the largest revenue shortfall was recorded in customs duties, more shortfalls came from personal income tax, value-added tax and corporate income tax. But capital gains tax bucked the trend, adding 5.4 billion rand to the fiscus.
We will continue to explore options available to us to stretch the rands in our care, to address the challenges faced by the majority of the South African people, particularly unemployment, poverty and inequality, and the myriad social problems which emanate from these. It is tough, but we must rise to the occasion.
Government is grappling with the challenge of mounting debt service costs following a sovereign downgrade by ratings agency Standard & Poor's and Fitch. South Africa's rising debt as a ratio to GDP has been revised up to 54.2% from 52.3%. Is projected to reach 60% by 2022. Government expenditure on debt is expected to increase at 11% for the next 3 years. The national debt will cost government over 163 billion rand this year, rising to 223.4 billion rand in 2020-21.
The credit down rating is also not doing us justice. Whilst I also am not a firm believer in us going for international borrowings, because again, you just end up in this vicious cycle of always paying the interest, which is just growing and growing. I mean, our cost of borrowing really is one of the negative things that are impacting us, especially during these difficult times.
Treasury will need to cut spending or hike taxes by 0.8% of GDP to stabilize the nation's debt at below 60%. The budget deficit for the 2017-18 financial year is forecast to widen to 4.3% of GDP compared to 3.1% in 2017. This means as people, we're spending more than we make. Balenhle Mthethwa, SABC News, Parliament.